We've got fire in the hole. Jackson Hole, that is. Welcome back. Vietnam Crypto Insights, your number one source for everything crypto. If you're new, I'm Terrence, seasoned investor in crypto and macroeconomic specialist. 3 years in Ho Chi Minh City, the crypto epicenter of the globe. Make sure you have subscribed and hit that like button so we can keep bringing some more of this content. But anyway, the hot news here, the hot news for everybody. We are on fire. And guess who set us on fire? Jerome Powell, Fed chairman. At Jackson Hole, the momentous occasion, he had some negative statements on the economy. I'm sure that Trump didn't like it, but there's always a flip side to everything, because these statements that he made were very bullish statements for risk on assets, such as tech stocks and, of course, crypto, which is what we're talking about all the time. And what did Jerome Powell say? He said the labor market is on shaky ground. And if you've been paying attention to any of the numbers that's coming out, I'm not talking about what Trump is saying. The numbers that the labor secretary that got fired said.
The July employment report, released earlier this month, showed that payroll job growth slowed to an average pace of only 35,000 per month over the past 3 months, down from 168,000 per month during 2024. This slowdown is much larger than assessed just a month ago. The unemployment rate, while edging up in July, stands at a historically low level of 4.2%, and has been broadly stable over the past year. Labor force growth has slowed considerably this year with the sharp fall off in immigration, and the labor force participation rate has edged down in recent months. Prices of goods increased 1.1% over the past 12 months, a notable shift from the modest decline seen over the course of 2024. Our policy rate is now 100 basis points closer to neutral than it was a year ago, and the stability of the unemployment rate and other labor market measures allows us to proceed carefully as we consider changes to our policy stance. Nonetheless, with policy in restrictive territory, the baseline outlook and the shifting balance of risks may warrant adjusting our policy stance.
What do these numbers and what does this statement by Powell mean? It means that the Fed is thinking about lowering interest rates. And yes, the market heard that. Wall Street heard it, and they went absolutely bananas. I mean, the Dow Jones went up, the NASDAQ, S&P, you name it. And of course, the crypto market, which we care about the most, all went vertical. But you know who went more vertical? You know what absolutely went bonkers? Ethereum, baby. That's one of my favorites. I've been saying that for a long time. But, let's talk about what's going on here. The crypto market is kind of like a coiled spring, right? And the Fed is the one that's about to release it. Historically, when the Fed starts cutting the rates, it injects liquidity into the market because a lot of the institutions and the big players, the whales, they like to borrow at cheaper rates. So, when that means cheaper borrowing, it means risky assets like our beloved crypto look incredibly attractive. And when the yields on the government bonds are trash, all the countries around the world have been dumping bonds. What do you think the money is going to flow? And I've been saying this for months. It's going to flow into high growth, high risk assets. And that's what we are involved in with crypto. Bitcoin, whether it's Ethereum, whether it's Solana, whether it's XRP, or whatever shitcoin you want to hold on to. Everything in between. The market has been waiting for this. I've been waiting for this. It's been a long wait. We've been waiting for the Fed to say they're going to signal that they're going to cut rates, and we've been waiting for like over a year. We already saw Bitcoin hit like all-time high once again this cycle, about 124 last week. And ETH is closing in on its previous cycle high. And now they're making another move. And we've seen the altcoins rallying hard. We've seen the fear and greed index moving from fear to neutral. And this momentum shift we've been waiting for. And, I think it's just the beginning. So where do we go from here? The market is pricing in a strong chance of a rate cut. This is what we're seeing here. And that should be probably in September. Now, if Powell follows through with his dovish stance, we could see a massive influx of capital. Bitcoin has the potential to rally toward 200,000 soon. My prediction a long time ago was 240,000. But some experts are even talking about a longer-term rate cut cycle. And that would actually be incredibly bullish. We might be looking at a super cycle. Now, but remember, this is not a sure thing, and I'm not giving you any financial advice here. There are risks, political pressure, persistent inflation, new regulations could also throw a wrench into the plans. And, you never know what kind of black swan event might be, on the horizon. But, for now, the winds are at our backs. The Fed is about to hand us the keys to the rocket ship. Rate cuts they're not just a catalyst, they're a launching pad, And what could this mean? This could mean for Bitcoin, the conversation has shifted to 150,000 to 160,000 as the next major psychological level. And some technical analysis are projecting a price of about 175,000 by the end of the year. The bullish case, like I said, some people are actually saying 200,000. Me, I'm really bullish, of course, 240,000. And if it's a super cycle, I think that my numbers are going to be more in line with what reality might hold. And what about ETH? ETH, it's not just riding on Bitcoin's coattails right now. It's actually taking the lead. It's a powerhouse of its own right. It's got the smart contract capabilities. It's the heart of DeFi, NFTs, dApps, and the whole new financial ecosystem, real-world assets, all of that. When the Fed cuts rates, it just doesn't benefit Bitcoin. It fuels the entire digital asset economy that runs on Ethereum. And, based upon the new all-time high for Bitcoin, the potential for ETH is even greater. New bullish targets for Ethereum are in the 12 to 15,000 range, which is right along what I've been saying for months. And this is because ETH's price tend to be more volatile than Bitcoin's, meaning that it can see a larger percentage of gains once the market gets going. So again, give me a comment and tell me what you think. Do you think we're going to be hitting about 150 to 160,000 Bitcoin soon, or maybe 200,000 by the end of the year? What about ETH? 12 to 15,000? But, remember that, the macroeconomic climate has fundamentally changed. The Fed is signaling a pivot. And in a world where governments are printing money, digital assets with a capped supply become the ultimate hedge. This is not just a moment, this is a movement. You've got your new numbers, the narrative. Now you either get in, you hold on, or you prepare for the biggest ride of your life. And guys, make sure you like and subscribe. Give me a comment. Let me know what you want to hear about next. Some Vietnam travel tips, some crypto shitcoins, some interviews with some founders here. I've done quite a few of those, or, some rug pull warnings. And with that being said, I'm going to make this short and sweet. We'll see you next time. Keep it coffee and crypto.